Good morning, Craig. How are you? Hey, Craig. Good morning.
Hey, good. Hi, Dan. How are you?
I'm good.
So you
Morning.
can hear me, right?
Yeah, I
And now
can.
you can see me.
Great.
Okay, good. Sorry, my hair's a little bit shoved.
Hold on one second. I've got my AirPods. I want to get connected here so I don't drown out everybody in the morning. There we go. There we go. How was your weekend?
Oh, not bad. How was yours?
Good. A little busy.
Yeah,
Still.
I had I had an open house Saturday. Did kind of well. Didn't it wasn't my listing, but
I'm losing you.
froze up.
I think you're freezing up a little bit there. Good
Okay.
morning. I'm getting you a little sketchy in and out there.
Okay, I'm gonna get on the Wi-Fi here.
Okay. Good morning, DeAndre.
Hello, good morning.
How was your open house?
It was pretty good.
Good. Right on. How many
Yeah.
groups did you have come through?
It was only about two couples that came through. I mean, that's
Yeah.
why I don't know if I should say a good open house, but I don't really know what a bad one look like either. Like,
A bad one is to have it during the Steelers game and then you're just sitting there twiddling your thumbs, looking at
okay,
YouTube.
watching the game yourself. Okay.
Exactly. All right, it's 11 o'clock. There's going to be some people coming in here. Just want to give it 1 minute. Craig, are you out of the Wexford Market Center? What market center are you at?
Yeah, I'm in
Okay.
Wexford.
Yeah, I just got off the phone with Karen. She's been awesome help to me.
Okay, cool.
Yeah.
I
Okay.
missed the pivot shift head call this morning. I was too late.
Oh no.
Yeah, that's all right.
All right. We got a couple more coming in. Let's give it a morning. Hi, good morning, Sue. I don't know.
Morning.
There you are. Good,
How's
good,
everybody doing?
good. There's Jay coming in.
Wonderful.
All right. I like to start on time. It's already 11:01, so let's get this ball rolling. It's the 7th, the most updated interest rate we're seeing here, which we knew the Fed last week was going to do on Wednesday. We're up to 7.375. Total active listings, look at that, just a smidge over last week. We're at 2233. I'm going to take this. There's Allie coming in. I'm going to take this. Give me just a second. I'm going to take this out so she can hear as well.
She's Zoom bombing, kind of.
There we go. How's that? Can y'all hear me? Okay. Y'all hear me okay?
Yep.
Okay, thanks. All right. Then we've got new listings in the last 7 days. Nice little drop there. That's not surprising. The numbers that we're seeing here are definitely reflective of the season. We had beautiful weather though this weekend. So I'm glad, Deshaun, that you had some people at your open. How many did you have, Craig?
I probably had about six to seven couples come through in a
That's
2
great.
hour span. It's not bad, yeah.
I think that the script or just the knowledge right now is that the buyers that are out there, there are still more buyers than there are sellers. Number one. Number two, it was nice weather, so people were out and about, and the buyers that are looking right now are serious. They're not usually dabbling unless you get the neighbor looky-loos, which is always a possibility.
Yeah, I had one of those.
Yeah. Okay, so we've got total pendings in the last 7 days, definitely down. We're seeing things incrementally go down. It'll be really fun to watch these numbers as we head into January post holidays. But again, I think this is probably, and again, anybody jump in here, my opinion is that buyers are understanding and they're kind of settling into the fact that interest rates are what they are. It's better to date the rate and marry the house because you can always refinance, hopefully, if these rates go down again in the next year or two. But I'm not an economist, but hopefully we would see those go down at some point. But
Yeah,
at any case, going into the holidays, this is very common.
I agree with that. I think a lot of the conversations I had in my open houses with people or potential buyers where, yeah, if you look over the next 10 years, it's going to be like what you paid last year as far as down payments and overpaying for a house versus what you're going to pay in interest over the next 10 years. It almost evens out. So I think if you just add $50, if you ever have the chance to pay down your principal, even the slightest bit, it could actually go the other direction.
It can
So,
make a huge difference.
and like you said, after probably about 3 years, and if you refinance that, where interest rates in 3 years are probably going to, fluctuate again or even get better,
Yeah.
that 10-year span is just 10 years. If you stay the course, you're
Yeah.
probably at some point going to refinance through that time period.
I think if we have buyers that are looking at stuff that's already been on the market, maybe 3 weeks or longer, we feel a little bit more courageous when it comes to our offers. We can maybe ask for a buy down instead of seller assist. We've talked about that in terms of how to bolster our offers is to buy down some points. So again, it might be better for them to ask for an assist if but it's up to them and how much cash they've got. We did see a little pop up here, but look, over the last 3 weeks, we've stayed really consistent in total closings. So as the total active new listings start becoming flat, the closings are going to go up because we had stuff coming from September and October, going into November. So when it was just a smidge busier. Anyway, but look, our listings are up overall, month, or week after week for the most part, especially since we started tracking at 1904 new listings in August, we're at 2233. Average days on market stayed again at 36. But as we've seen, we really are going to start seeing this ink up or inch up or creep up. That's it. Ink up. I don't know what I was thinking. Creep, whatever. These are just really good substantive conversations to be having with your sellers, to be pricing accordingly. This little number here, we've been seeing this fluctuate around 30,000 here and there, give or take. It just depends on when $1 million listing. Again, Craig, I want to clarify these numbers are from Allegheny County only, single family residential. I don't have anything else in there. This is just generic. I think this gives us a better idea overall of just like that. Anybody can take this spreadsheet and copy it, make it their own and change, their criteria and track these. Price reductions are down. I think that's just probably because, listings have been flattening out, but, sales price to list price ratio. Each week I talk about this. This is such a good number. When you're pulling data to price a listing or you're considering a price reduction, please make sure that you take a look at that particular area of the solds in the last 180 days and take a look at the average days or the average SP to LP ratio. If it's like this 3%, maybe take your comp or your sale price if they need to sell quickly and reduce it by 3%. That might put you right in the sweet spot of being able to get multiple offers or whatever. If y'all have any questions on how to do that, let me know. I was thinking maybe I could do like a YouTube video of how to pull that up on the MLS so that you can find those numbers and price accordingly. As a realtor, pricing listings was always just like the thorn in my side because they expect you to have like magician powers to know, to know exactly. I've also used a tactic with listings, especially if it's in a certain price point and you can't quite, maybe it's unique or whatever. I have offered in the past with listings to, if the seller is willing to pay for an appraisal and they price it at or just below the appraised value, I will reimburse them the cost of the appraisal out of my commission. So it's a win-win because I'm not technically allowed to do valuations. I can do market analysis, but again, I do pull square footage and try to get close when I'm calculating. That could be another conversation as well.
Yeah. And it's hard to gauge how appraisers are going to be too. You just don't know.
Yeah. You don't know who you're going to get. But it's been a while since I've had one come back off. But in any case, something to be thinking about. Number of expireds. I think that's going to go up as we see days on market go up. That just makes sense. Good morning, Denise. And we've got number of agents. Oh, yeah.
It's still?
Yeah. Sorry, Denise just walked in. She's also on the call. Okay, number of agents, 8730. So we're coming down a little bit. This is not surprising. This time of year, people just start hunkering down for the holidays and think, oh, if they're online, taking classes or whatever. But we've got a pretty good push here for pre-licensing that's coming up here. So looking forward to getting more numbers in that MLS. Just means
So
that
I think, can I jump in here? Like,
Yes,
I have
sir.
a question. Like, what do you like? I find it interesting that you have that statistic on here, and just curious as to like what's a good reason to know that stuff, like
I
about
feel
all
like
number of
it's
agents.
I feel like it gives us a realistic expectation of how many actual agents are out there versus like how many are in production. I know at our market center, we have, 103 agents currently, but only a certain percentage are actually in production. And so as we're heading into the shift, we're going, or in the shift, as my opinion is, like we're in it, we're in the outer rings there heading into the center of it. But I just think it tells us a little bit about our sense of urgency as realtors. As more agents are coming in, or going down, it's telling us that some agents they're taking their foot off the gas, right?
Yeah.
This is not telling us like how many new ones came in. So we're not seeing the gross and the net. We're just seeing the net. We're not seeing how many are new versus that came in versus how many seasoned agents went out.
Mhm.
So I just feel like it's an interesting number to kind of watch as the shift goes. It's just a number that other market centers had recommended tracking. And I just think it's interesting to see it
Yeah.
up and down.
I think it'd be interesting to see, like you said, the other numbers, like how many came in and how many came out, how they arrive at that number.
I can share with you guys probably next Monday. We get at each market center, any brokerage gets a spreadsheet at the end of every month. It's called the PSI list. It's a Pittsburgh State testing of like who all tested to get their real estate license. It tells us who passed and it tells us who failed. And so we use that as a recruiting tool. All brokerages do. I remember when I got my license, the phone started ringing from people.
Oh yeah.
But I really do feel like it's an indicator of, as people are feeling the pinch in other areas of the economy, maybe their own jobs, they're thinking this would be a nice little thing to dabble in. But again, it's so important to remember the old Pareto principle that you can apply to this is that 20% of the agents are really out there doing the bulk of the business, right?
That's cool.
I make co-broke calls to agents that close with every single one of our agents here. So any closing that Sue has or DeAndre will have or Denise or Allie, when it closes, I know who closed it and I call that other agent and ask them, how did we do? How can we improve? What was the process? And so, and then I ask them like, how's the business? You're coming back in? Okay. How's the business? How are you seeing it out there? Anyway, just an interesting number.
Yeah, that is good.
Yeah, of course, we have the 7.375 that we talked about first. Todd, I've asked Todd Stainbrook to join the call. He's he's our in-house lender with AJM, he and Carrie Ann. And I just really like, as we're looking at these numbers continuing to I said it again.
You said
Inch up, creep up, whatever. Inch and creep. Todd, tell us a little bit about what you're seeing, how you're feeling. He's with AJM Mortgage. And just fill us in on your thoughts right now as you're talking to buyers as they're coming in the market.
I do feel bad for the entry level buyers because it seems like the market day by day is pricing them out of, out of the market. Like, their pre-approval keeps getting lowered because of the higher interest rates. What I am seeing is, and this just feeds into the whole separation between the haves and have-nots, is I'm getting more and more jumbo buyers every day, and the private money that's available to them is heads and shoulders better than what the conventional rates are. For example, I have a jumbo product right now, 30-year fixed, 10% down, 5.625.
Physician loans too. They're low. Like that again.
Right here.
Todd, that's such a good point. And I want to point this out because I think I've mentioned here before, we were doing this Monday market class where I was hosting it during COVID. And one of the things we noticed when I stopped tracking was that the first time buyers that were in the lower price points were just kind of stuck because they either got furloughed a little bit or they didn't have the full employment history, blah, blah, blah. But the havers, not the have-notters, the havers were buying. They had the money, they were able to work remotely. It didn't affect their job at all. And so, you know, unfortunately, economically, yeah,
That's what I'm saying. And you don't have to do too many jumbos to be happy.
no,
Right.
I know. Oh my gosh, from your side, for sure. It's more bang for your buck, right?
Right. And it's
Um,
only one loan. Like I have to do 6 other loans to make up for it. So my processors are happy, you know, unfortunately it's a win-win for us, but not a good commentary on the market.
Yeah. How many buyers are you seeing having real issues around their price point needing to change based on the interest rate?
It's affecting those ones like where they're in the 200 to 250 bracket, you know, and now they're got to look for like something in the 150 to $200,000 bracket, and it's just not
Ouch.
out there.
Yeah.
Ouch. Have you seen anything come across where a buyer's agent has been able to negotiate a buy down in terms or versus a seller assist, or same thing?
I push this a lot and like nobody's taking me up on it. I'm like, look, the price is what the price is what it is, right? Rather than ask for a reduction in sales price, see if you can do a 2-1 buy down. And this kind of goes against my whole being. Like I hate to put somebody in a loan for to help the prospect of refinancing later.
Yeah.
But like if you do the 2-to-1 buy down and the seller pays for the buy down, it's kind of like a short-term fix. You get 2% less for the first year, 1% less for the other year, the following year, and then in year 3 you're back up to the 7 3/8 where everybody else is at.
Yeah.
But here's my thoughts. If I'm wrong, 7 3/8 will look like a godsend. We'll go back to Jimmy Carter era rates and you'll be in the 13-14% and you'll be half. If I'm right, then maybe you have the opportunity to refinance back into a 4 or 5% interest rate and call it a day. Yeah, you'll have to refinance, but at the end of the day, if you plan to stay in that house for a long period of time, it probably makes sense.
Got it. Well, thank you. Thank you for coming on. If you ever feel like there's more news you need to share with us, I'll extend the invitation for you to join us anytime. That link is
Okay.
always the same link, except for holidays. We are here every Monday at 11. So join us anytime. Would love to hear your feedback. Does
Okay.
anybody else have any questions about some of this data? All righty. Well, thank you so
Good.
much, you guys, for chiming in. Craig, great seeing you again. Hope to see y'all
Yeah, you
next
too.
week. Appreciate
I'll see you next
Hope
week.
Make it a good week.
Thanks, Jen.
Thanks, Jennifer. Thanks, everybody.
Bye-bye.
All right, see y'all guys.